All right, greetings everyone. This is Eric. Let's put my mic on. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com, and there you can download my free ebook that will teach you the basics of options trading. And also, upon downloading the free ebook, you will be put into my email distribution list, where you will start to receive my weekly newsletter called the Cubicle Weekly Reader, where I talk about the world of investing, finance, economics. I also give stock recommendations and also cryptocurrency recommendations. And from time to time, I give book recommendations as well. So you definitely want to be a part of the Cubicle Weekly readership. All right, so today is Thursday, December the 15th. It's approximately 3:32 p.m. Eastern Standard Time, as you can see here. 15:32. And so I'm in quite a few trades right now. Of course, we just had the CPI, the Consumer Price Index, come out on Tuesday, the 13th. As a result, the market responded positively to the positive CPI number. So the market gapped up on Tuesday, but then during that same trading session, the market came back down to pretty much fill that gap. As I mentioned before, oftentimes, but not all the time, when the market gaps up or down, during that same trading session, the market has a tendency to fill that gap during the same trading session. And so that's what took place on Tuesday. Wednesday was the FOMC meeting where they announced, Chairman Jerome Powell announced the interest rate hike. So it was 50 basis points, pretty much what the market anticipated. And so nevertheless, the market actually sold off as a result. So that was roughly, that announcement came out around 2:30. So as you can see here, this is how the market responded to Jerome Powell's announcement. Some folks are actually surprised. They thought that the market would continue to actually trend upwards, but nevertheless, one can never predict what the market or how the market is going to respond to any kind of macroeconomic news. All right. So today, I actually, decided to jump right in rather early this morning. I put on a vertical put credit spread because the market gapped down. As you can see here, the market gapped down at the open. And considering that the market sold off yesterday, I figured that the sell-off would not be as extensive today. And so considering that the market had already gapped down roughly 50 or so points, I thought it would be safe to go on to basically jump in early, get on the put side. Let me just pull up my other account here. Get on the put side, right? So here's your put side. Here's the call side, of course. So I got in at 38. Let me just look at the activity here. So I got in at 38.85 and 38.80. So essentially, I was here and I was here this morning. So this was my initial position this morning, but I got in a little too early, a couple of hours too early, and the market started to move against me. But nevertheless, as you can see here, had I stayed in that position, I would have been all right. But nevertheless, you got to trade what you see and not what you think, as I always like to say here. So I decided to close out that trade, and I put on a new put credit spread further down at the 38.60 and also 38.55. The market didn't really test that particular put credit spread, but it started to come down. And so again, I decided to to be proactive, and I actually rolled that position out to the next expiration date, which is December the 16th, which is tomorrow, right? And of course I took an additional credit for making that roll. So right now the position, so I rolled the position down from 38.60 and 38.55 to 38.30 and 38.25. So as you can see here, in the last 30 minutes or so, the market has started to somewhat bounce back. It was down roughly 115, 116 points at one point during today, but nevertheless, it's starting to bounce back a bit. So I'm in this position for $579. So I've made roughly 74% of that, which is $429. So if we look at the actual positions, so as I mentioned before, I have rolled this vertical put credit spread from today's expiration date to tomorrow's expiration date. I took an extra 15 cents credit, or $15. And so right now I still have on, I actually doubled up on the call side. So I have sold essentially, 6 contracts on the call side for these 2 vertical call credit spreads. And also I pretty much have the same position on in my Thinkorswim account. Now my Thinkorswim account, I actually lost some money early on because I actually closed out the vertical put credit spread for a loss. But as you can see here, because I've doubled up on the call side, let's just go to the trade. Because I've doubled up on the call side, I have been able to make up pretty much the entire loss from closing out that vertical credit spread. So as you can see here, I'm in the 39.35 and 39.40 vertical call credit spread, and then the 39.45 and 39.50. And I also put on an additional vertical put credit spread, but I had to roll that just like I rolled the vertical put credit spread in this account here. So I rolled it from the same strike prices of 38.60 and 38.55 down to 38.30 and 38.25. So in this in my Thinkorswim account. So as you can see here, just show you guys the spread here. So here is the vertical call credit spread, and again I rolled it out for additional credit. And so essentially I'm going to be close to breaking even here. So right now I'm up $560, but on the entire day I'm down, just $10. So all in all, not a bad day of trading. Again, I probably should have held out a couple hours more. I normally don't get in when the market first opens. I normally wait. Sometimes I'll wait at least an hour. Oftentimes I'll wait until the afternoon just to allow the market to show its hand, if you will. But yeah, so again, we got roughly 20 minutes before the market closes. And so I suspect that, considering that the market has sold off pretty significantly today, it was down yesterday, it's down today, we're probably going to have, a slight update tomorrow, or a pretty much, sideways trading day for tomorrow. So I'm anticipating that this vertical put credit spread that I rolled out from today's expiration until tomorrow's expiration will do well. I'll be able to close that out for the full credit in this account, and also my Thinkorswim account.